Rohr here with an early global view on Tuesday, October 28th, 2014, and it is currently 6:45 a.m. U.S. Central Time. And don't forget, after the end of daylight savings time in the UK and Europe, that means it's an hour earlier than usual, relatively, in Europe. And there are still quite a few important macro factors that are impacting the markets, have actually put the S&P up close to $10 this morning. So what does all this mean to the markets? Well, for right now it means that the equities are liking it. The 10-year, the December S&P 500 future had been up 10 on the day. It's currently up 9. Up at the 1966 level. And this is important because we had said right along that if the market got above, 1900 generally, and especially 1918 to 25, that it probably could continue through the 1950 to 55 resistance, where it even tried to leave a nominal down break on its sideways drift by a little bit later on in the morning yesterday, and that was below the 1957.50 area. But when it couldn't develop any downside momentum off of that, keeping the bid means it was always a good candidate to go up to the 1975 to 78 resistance, and or the high from back in July up at the 1985 area. And you'll also note that ever since it overran the Fibonacci 2/3 at 1936 of the entire swing down from the actual lead contract futures high, which was actually 2013.5 set by the September contract, down to the trading low on the the October 15th bottom of the debacle on the Ebola scare and weak U.S. earnings, that this market was above that 2/3, it's ready to range back up further. So support now would be back in the 55 to 50 area, with that tolerance to 45 now reinforced by the low of the day from Monday. The next lower supports, bigger supports, are back in the 1925 to 18 range. And of course the big level on any overall retracement from here is going to be back in the 1900 area. It was a gap back in late May, and it's a gap again coming in here in the middle of October. And also note that if the market strengthens further, at least temporarily, the hourly MACD has the possibility to push back out above the upper runaway band, which would reinforce some sustained further strength. We're going to be keeping a close eye on this throughout the course of the next couple of days. But that pretty much does it for the short-term view of the S&P 500.